Good morning, everybody. Mike Vacchi, Princetontrader here with your pre-market webcast for Thursday morning, January 31st, 2013. Okay, pre-market look here, daily chart of the ES. Currently trading 1493 half. That's about 13 handles off the highs. We have done as low as 91 quarter in the overnight. The overnight was a pretty tight range between 91 quarter and 96. The reality about today is this: if you're a bear, and everybody knows I am, you cannot get too excited about this. First of all, you should never get excited when you trade. Whether you're making money, losing money, somewhere in between, you don't get excited, okay? The last 2 hours of the regular trading session, the bears actually won. They won the FOMC deal. They got the number, the FOMC came out as we were trading about 1502. So they've got 1502 to 1503 above them, and that's significant. They need to keep that above them. If they lose 1502 to 1503, we will absolutely make new highs. We will absolutely make new highs. So the bears have a little bit of a cushion, but they need to keep pushing. And if this is a true pullback, it's not going to become evident until we have a closing price below 1477, which happens to be the middle band. So the bands are kind of tightening up here a little bit, and that tends to tell me that we're going to go ahead and revert to the mean. Whether that's just a bounce off the middle band remains to be seen, but we have not involved ourselves with the 20-day moving average in any way, shape, or form in some time. And the market, as a function of mean reversion, needs to trade to that price. Does that mean we're going to do it? Not unless the bears can really get out of their own way. So they have today to push. We've got the employment number tomorrow. So there's opportunities here for the bears to make some headway on the downside, but they can't let up just because they were able to knock the market down for 2 hours on a Wednesday afternoon. As far as actual levels that I'm looking at, there's a daily and 3-day pivot level this morning, 1497.75 to 1497. That's going to be important on a rally. That's really, if you lose a daily and 3-day level, say up and we print 98, then you have to be concerned that we're going to go ahead and really test the 1502 to 1503. Okay, so there's a couple lines in the sand there as far as rallies go. So if you're a bull and you buy what I think will probably be another morning dip opportunity, those are your targets to take some off. 1498, 1502, 1503 print. So I'm expecting a little bit of a two-sided trade today. I don't think we're just going to fall out of bed. The dip buyers have no reason to really fear any of this. All of this is just a better entry for them. Absent some piece of news. So that's what I'm looking at today. Now, if we do break out to new highs, I'm still looking at 1508 half and 1511 half as potential exhaustion areas. If the 1511 half comes on pretty good volume, that may go ahead and we may see some price rejection up there. But remember, tomorrow morning is jobs, so you have to ask yourself: do you want to be you want to be heavy long up around 1500 ahead of a jobs report where the economic news of late hasn't been real good. So we've got that going on too. A lot of cross currents in the market. Okay, everybody, have a fantastic day. Mike Vacchi, Princeton Trader here from Mr. Top. I'll be back tomorrow morning with another webcast. Trade them well, everybody.